Three key fundamental themes this week, guys. Number one, a resurgence in fears that there's going to be a second wave of coronavirus. So these fears were triggered Wednesday night, really, towards the end of the US Wednesday session. Bloomberg reported this article and they were citing the data in Florida, California, Texas, and other states, concentrated mostly in the south of the US. These states are seeing an increase in the rate at which this virus is spreading. Now note, most of these states have reopened for more than 6 weeks. So economic activity has been picking up in these states, which is a good thing. But now what we're seeing as a result of more activity, more interpersonal like connections between people again, we're seeing the rate of the virus, the rate at which the virus is spreading pick up. And obviously this is bringing a risk of further lockdowns. Houston in Texas apparently is talking about doing lockdowns again. So big threat to markets going forward. Number two, FOMC. So the FOMC, that was on Wednesday as well. Held rates at zero, at just above zero as expected. Formalized their QE program to 80 billion in asset purchases a month, another 40 billion in mortgage-backed securities. That was all very much as expected. One of the big focuses going into the meeting was the topic of yield curve control. Going into the meeting, expectations were building that the Fed was going to maybe not out and out adopt yield curve control at this meeting, but at least signal that they are planning on doing it in the next couple of meetings, because there were reports that they were looking to copy basically the RBA, who have got a target of 0.25% for the 3-year Australian government bond. Reports saying that they were looking at doing something like that. However, in the meeting, Jay Powell, the chairman, he pretty much said that they're still discussing the merits of yield curve control, whereas markets were more hoping that the Fed was going to be already on the path for yield curve control. So markets didn't really like that, to be honest. And this brings me on to point number three, which is risk off. And the first 2 points combined, and we saw this big cascade, this big risk off moves, risk assets, stocks, AUD, NZD, CAD, crude oil, all got slammed on Thursday, yesterday. And that's pretty much a culmination of those other two factors. Not enough stimulus from the Fed, people really wanted that yield curve control, and also fears of coronavirus. And remember guys, coronavirus is still the biggest threat to the global economy and the biggest threat to financial markets as well. And that is why we saw that big move to the south. That is pretty much it from me for now, and I'll see you in the next one.